Sunday, October 30th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with John Lee. He's the CEO and Executive Chairman of Silver Elephant Mining Corp. Mr. Lee has 20-year experience in mining, specializes in M&A, and raised over 120 million Canadian dollars. Mr. Lee identified, negotiated, and financed Pulicayo acquisition in 2015, Ghibellini in 2017, and Minago in 2021. And Mr. Lee graduated from Rice University with bachelor's degrees in economics and in engineering. And what we're going to talk about today initially is Mr. Lee's, or John Lee's, view on the geopolitical, economic, currency market situation. And then later on, we're going to look at how John is trying to exploit the current environment with Silver Elephant Mining. John, welcome on to the channel. Nice to speak with you.
Mario, thank you for the invite to be on your show. It was, thank you for the introduction. That was a handful. Yes.
That's good. And so maybe we can kick off with what's happening in the world. We spoke a few days ago, and you have some very interesting points about especially what's happening to as it pertains to the dollar and the dollar dominance of the world economy, and Taiwan, China, Russia. Maybe we can kick off with that.
Right. Well, Mario, as you mentioned previously, I'm actually a chartered financial analyst with 20 years of experience in mining and fundraising in the mining industry. I'm a good friend of David Morgan, who's a silver investor and did a lot of research back in the days of Ted Butler that has written extensively about silver, and James Turk, who's my mentor, and James is one of the authorities in the gold industry. So I thought it was interesting when I sort of watched a few of your clips that talked much about the world economy, not particularly US-centric, but also a lot of brought up about silver. I was fairly quiet in 2021. Actually, I also started investing in mining, in silver mining, before even Keith Neumeyer started First Logistics. So just to put everything in a bit of a context. I was quiet in 2021. I was on the show of a couple of other people in February, and I said that this is going to be 2021 would be the year of very bearish equity, stagnated metal prices because of rising interest rates, and that's a negative, at least a headwind for the metals initially, and also is definitely a bad element for the equity market. And I speculated that the 10-year interest rate in the United States would go up above 3%. And back then, it was not even 1%. And little do we know that, we're looking at the fastest trajectories of percentage increase in the interest rates in the history, literally, of the dollar. And now moving on to 2023, succinctly, I quite active in Twitter. I said that the bulk of the first phase of the stock correction is behind us. And I think the stock has held up relatively well given the circumstance, as well as the housing market. And now the headwind for the metals, given that equity market stabilized, the interest rate hikes, at least for the next 3 to 6 months, will not see, sort of being the same magnitude as what we experienced in 2021. Now we're going to get a bit of a relief rally in gold and silver. And so my target for 2021, my target for 10-year was 3%, we're 4.5%. And my target for the NASDAQ 100 was 11,000. We touched that target again. So going on to 2023, my target for gold is well over 2,000, and silver is going to challenge $30. Of course, the caveat, Mario, as you know, gold and silver market is very, very heavily managed. And just along with all the other markets there in the world in terms of other commodities like the oil price, like the equity, like the interest rate, they're all very heavily managed. But gold and silver in particular, because it's long history and the status in direct antithesis to the dollar. So we might see a lot of volatilities in the deck. But I do believe that silver bottom at 1750 about back in August, nobody ever imagined that could have get that low. I thought 20 was the absolute bottom. So it dipped at 1750, which is the support of the level before the run up in 2020, as you know. And gold has acted most strongly. I think to trace back the same level when silver 1750 back in 2020, gold was at around 1550. So gold never got to that point. And subsequently, you can see the gold to silver ratio, which you also talked about, is at an elevated level at around 85 to 90. It's almost like historical peaks, only surpassed a couple of times in the past. But I believe that we're at or near that peak. There may be another flush down before year end, but 2023 is going to be a very, very prospective year for gold and silver. And last but not least, just a bit of another sort of anecdotal experiences. You're not seeing a collapse of gold, even though there is obviously a bit silver in the correction. But given that belief that the metal market is bottom for gold and silver, yet equity market are trading as if that nobody has taken any interest. So that is another very clear indicator to me that the subsequent rally that we see it's not going to be the same variety as maybe it was in the last couple of years. And these are counter rallies in a cyclical bear in the last 2 to 3 years. But this one we're going to see, I think, is going to surpass all expectations because, simply put, there's no expectation now left in the market. The powder is dry. Everybody who's in is already in. They're all in. Everybody who's on the sideline are very cautious. So the next wave of investors that are coming will be generalist fund, a bit agnostic in the market, but the technical and fundamental indicators that hit both a buy signal. And you're going to see people stop tiptoeing into the metals market. It's like, as I said to some people, it's like they've been stunk and then be hurt by the metal so many times, they're just literally going to hold their nose and buy into the market because the technical indicator is going to surpass that 50-day moving average. And then once it goes past 50 days, which silver has, right? It's trading just below that level, but I think it's not going to look back once that vindictive breakout happens. And I would say that's going to happen in the early part, Q1 of 2023.
Just to make a little correction, you said your forecast for 2021, they're for 2022, right? You said that.
Right. For 2022, right, exactly.
Yeah.
That's what I meant. Yes.
Yeah. Okay, John, and what about the dollar? How do you see the dollar? Because I think the dollar has been a little bit of especially the dollar index has been a distraction to people who think that gold and silver are the ultimate form of store of value. And the reason I say that is because you've seen the yen collapse like 30%. You've seen the pound also, and the euro, mostly because the central banks of those countries, they kind of dragged their feet in terms of raising rates. They weren't as aggressive as the Fed. So how do you see the dollar going forward? And also maybe add on the geopolitical aspect for the dollar.
People wrote books about the dollars. It's a multi-dimensional, very connected issue, Mario. I don't see a crash of the dollar index, even though I put out a tweet out there about a month ago. I said the dollar is going to oscillate between 105 and 120. I don't see a collapse of the dollar, partly because all the currencies, I think, it's come to roost. It's clear to be seen that all the G7, G8 currencies are subordinated to the dollar. And the dollar itself is subordinated to what they call the shadow figure. And it's not just WEF, but there's other people behind the scenes and that have lived through time and back before even the United States was created. And it's clear for me to see, Mario, if you take an example, like Australian dollar has no place to be at 65 cents to the dollar. I mean, last time copper was 350, Australian dollar was trading at a premium back in 2011. Same with the Canadian dollar. I mean, oil went as high as 120. Last time this happened, Canadian dollar was trading at a dollar premium to the US dollar. So I think over time, the borders or the differences among all the fiats are going to be increasingly like there's no border. They're all going to look the same. Every country has their geopolitics issue. Every country has special deficits. And now we're in the phase I don't buy so much of Brent Johnson's dollar milk theory in that the dollar strength is a function of the debt squeeze. If that's the case, you're going to see the money supply go down, because when the dollar is issued in the form of borrowing, you're going to see the money supply increase. So when the dollar is paid, that is the way you're going to see the dollar supply decrease. But it's not the case. What we're doing is I believe it's, again, I don't want to use manipulation, but it's orchestrated, managed dollar processing, hiking up interest rates, in order to and the reason for that is multifold. But part of that is to consolidate the currency market for the eventual path of central bank digital currency. It's a lot easier to manage one currency than manage all the different currencies. So, however, you can only hike up the dollar so long, and it's much easier to devalue the currency than to strengthen the currency. So, I mean, especially given what I've mentioned, that the interest rate is gonna, it's gonna level at least for a few months, and what other the G7 G7 and GA or G20 economies and governments being pressured to tame inflation and to sort of catch up with interest rate differentials. So I don't see, I think the dollar strength is being limited. However, I don't see a dollar crash, as I mentioned. I think all the central bank monetary policies are, and even fiscal policies are dictated by some other, non-foreign entities, as Lee Strauss learned the hard lesson, and learn who the boss really is. Regarding Japan, especially, I think they're a bit late to the game, and there's always a struggle between national politics and versus transnational politics. So the transnational politics is saying hike the dollar, jack the dollar up, subordinate all the world currencies. But I think domestic national policies are starting to say, hey, this is not to the best interest. They're getting pressure domestically to catch up at that differential of interest rate and also bridge the gap on those foreign exchanges. So you're seeing a lot of noise recently coming from Japan talking about, ditch this 0% interest inflation policy in favor of catching up because their exports are hurting, their energy policy is crumbling, and at 150 yen is simply not sustainable. That is just the practical economic side of it. Mario, we'll have to really delve into the politics side of the history of the dollar and why the dollar hegemony is where we are today, and why other national governments are listening or adhering to the directives of this hegemony, which I think is breaking down as we speak, Mario.
Yeah, and I think what you said about the dollar index, yeah, we could hover around 100 and 115 or 120, but I think eventually the way the fiat currencies are going to devalue, and I've spoken about this quite a few times, that they're all sinking against real things, and that's why I think gold and silver and other commodities that we're going to need a lot more in the world, especially with this climate agenda, green agenda, which you might not agree with it like me, but I think it's inevitable because there's so much political power and pressure behind it that they're gonna, even if they don't succeed 100%, they're gonna push a lot of it through.
Mario, absolutely. I am not a scientist, so I'm not going to comment on the validity of the green policy or the climate change policy. It used to be called the global warming until notice that parts of the world, the temperature going down, so they changed to quote unquote climate change. And the government is adopting what I call the carrot and stick approach. So the stick is the carbon tax. Every country will be assigned, or industry will be assigned a carbon credit in terms of carbon emission. Even individual will be issued before, a carbon credit card where you can only consume a certain number of carbon credits. Like if you're eating a cow or driving too much gas, you're going to be put a cap on it. So that's the penalty. You're going to be assessed a penalty if you to exceed the limit. But there are also some sticks, incentives. So, I mean, there's a lot of grants available from national governments if you were embarking on this green policy. And the publicly listed companies like ours have to, especially if a producer, have to now issue what they call the ESG report, which is environmental sustainability and governance report. So, that levels the playing field a bit amongst sort of, governance part of the consultation with local communities. So that is what we support. But given the circumstance, we have to play sort of by the cards that we're dealt. Mario, I do want to say, I'm a little bit satiric of people. So looking at inflation stats and saying inflation's out of hand. Well, you're reading the same inflation reports that are coming from the bureaus that were telling you they're 2% inflation for 10 years. So I think there's a bit more that meet the eye. Like if you look at even Japan or parts of Asia, you're not seeing these runaway inflation. And secondly, last time oil prices at 100, 120 back in 2012, 2011, you're seeing 2% inflation. So, there's a lot of different things that are coming at play, but I don't believe, there's abundance of oil, but I think just the supply logistics of disruption and just a lot of different politics and the war coming into play. And that provided a bit of backdrop for the official figures of CPI. Again, I believe that's elevated in order to justify a hiking in the interest rates. And the reason they do that is I think the landscape has clearly changed where they're promoting own nothing and be happy by 2030. I believe that, that is not what I believe. That is a fact. Mm-hmm. And that also answers a lot of questions that used to be inexplicable. Mario, have you thought about why, right, interest rate was so low for 10 years? That doesn't make a lot of sense. And now the same Fed used to say, oh, we can target 2 to 5%, right? We need to have a band. And so therefore the interest rate should be accommodative to prevent further episodes of financial crisis, for example. And now the same people, or the script is completely reversed. And they're saying that we have to stick with the 2% inflation and historical guidance. You'll want to be more aggressive and hawkish than dovish. So you're looking, I think that if you look at from an objective lens point of view, that you're seeing that clearly the notes, the script is being changed. And they're just being broadcasted by the same, by the mouthpiece. It's kind of 1984 George Orwell. And so which I think for individual investors of our age or baby boomers or late Gen X, they're looking to preserve your nest eggs. This is the first time I recommend people to buy gold and silver physical, since I have done for the first time in more than 20 years. And I bought my silver watt at $15. I remember back in 2014, 2013. And now it's unfathomable that we are going back to the same levels as it was 10 years ago. So I presented a great opportunity. And, another small caveat, we can talk about why silver prices are so low, even though the premium is so high. Because historically, when you have a high physical premium, coin premium to the metal prices, that is a sign of a peak of silver. So, why is it the case silver is so low when the premium is so high? And Mario, I just answered that real quick. I believe that I think gold and silver is clearly money. We can talk a bit about history, but now, the prices are heavily managed, and the shadow figures they understand gold and silver are money, but they're clearly, they have a truckload going directly to the refineries and taking it through their vault. And my suspicion is they probably own around 70 to 80% of all the gold and silver in the world. And we can read about the gold in Fort Knox, where that gold belonged to, and the Bundesbank, how much gold that is. There's a lot of studies about it I wouldn't go into, but they're throttling the supply of gold to the retail market. It's kind of like, Mario, it's kind of like, imagine you go to like a restaurant, a 5-star Michelin restaurant, and there you have the Beijing duck, you have the Alaskan Atlantic cod and all the fancy food at the very cheap prices. But guess what? You're not invited. You cannot get them. So that's why you're seeing that two-tier pricing, and eventually that could be manifested into a bankrupt of the COMEX market, just like what happened with the nickel market in just in March when nickel went up 5 times, or the palladium market in 2018 when palladium went from 500 to 3,000. And you can have a reply like that for silver, but right now they're managing the market sort of reasonably well. But even though you see the inventory of COMEX going at a record low level at around less than 50 million ounces, that's not even a month worth of physical consumption of silver right now. So, we're in a precarious situation. All in that said is, I believe now is excellent market time to get into silver, but you want to own the physical form. because you never really know. There's going to be a lot of volatility on paper, and you're never going to know what will happen if you were to trade on the paper paper silver. And I'm sure you probably just touched that subject upon with your audience as well in the past.
Oh yeah, and why do you think the powers that be, the people who own a lot of the gold and silver, why do you think they want to accumulate so much and keep the public away from it? Do you think they're going to use it to set up a new system?
Mario, those people, they don't count their wealth. How many dollars in their bank account? They own real assets. You know, they own the percentage interest of the Suez Canal. They own major logistics transportation routes. They own real assets that generate income, and they own like Bill Gates, the farms in the United States, and all the strategic assets all around the world. So they don't count their baskets in fiat currencies. And secondly, to understand when Ben Bernanke, I mean, I was in the time when Greenspan came, and then Bernanke, and then these people are always very elusive about the, you know, let me be clear, they know the role of gold and silver, and United States law really, I believe, lost its sovereignty in 1913 when the creatures Jekyll Island created the Federal Reserve Bank that's basically controlled by the elites as a way to facilitate the printing to further acquire and consolidate their power. So they understood in order for this agenda to continue, and this is a 100, 200, 3-year agenda that happened before the past and continue into the future. They have to manage the real assets in gold and silver. I mean, imagine if the official figures say, you know what, we hostage, right? We taken the world by hostage. We taken the central bank printing machine as our own, and look at the stamp, the price of a stamp, 2 cents now is 80 cents, 50, 60 cents, and gold was $10, and now it's 1,800. Of course, the world, like Henry Ford said, if people don't know the financial system, then they would go into revolt. So they have to continue to play this storyline that gold and silver are barbaric relic. They don't serve any purpose. Even Warren Buffett said that. And if you look at the reason Warren Buffett dislodged their silver investment, they said that it was not to do with monetary issues, but it's nothing to do with inflation. It was just supply and demand or whatever. It's almost like they were caught into saying that. So the central banks, sorry, the elites have to keep the lid on the gold and silver prices. I believe that cryptos are invented also as a distraction from that. And one of the things is also very well do is they also very understood, they always create this control opposition. So you have the gold and you have the dollars as the currency, and you have the control opposition of sort of this subordinated currency, and now they're indistinguishable. So they have another cryptocurrency that's invented as a control opposition, and so they have to keep gold and silver in check. However, as I mentioned to you, Mario, the reason, like my speculation and my belief that they are backing up the truck directly from the refineries is that you can see the premium, right? They're rising. So that there, and also another interesting thing is, if you look at the physical trading at LBMA in London, you would imagine that gold at a near record high, especially 2100. Scotia, one of the top 6 or top 8 member of LBMA, stopped trading physical metals in London, and you have to think, well, it's such a robust market. How come you don't have that trading and business? And the reason is LBMA is quickly evolving into another COMEX, whereby there's not a lot of physical trading that's taking place. It's all become paper, and the people are very nervous of selling physical metal to accounts that are not, to buyers that are not accounted for. So what I mean by that is, I believe there's only very handful of people, again, I could talk elites, that are accumulating those metals because they're really the store of wealth. And in the meantime, they have to put up that facade of that there is actually a functional market liquidity, which there's not, as you know.
Yeah.
And that's what's happening.
So that's good advice. Follow the elites. They count their gold and silver in ounces and tons. That's what
Yes.
we need to do.
And another thing is, you know what? So real quick, Mario, is
Yeah.
they don't care for paper loss. Like all the paper loss in their COMEX futures market, and they're just have the banks print it up and paper up because it's all fiats, Mario. It's
Yeah.
all fiats. And I think another evidence is if you look at the Linton Metals Exchange, the biggest short person was a conglomerate out of China, and Linton Metals Exchange was owned by the Hong Kong Stock Exchange. So they halted the trading, and further, they allowed certain members to roll over their contracts without settling. So that just goes to show that there's a lot of privilege that happens behind the scenes that are accommodating and for the to cover the paper losses or just pay out the paper losses, pressuring people want to take delivery of COMEX that are unknown. And I think there's a variety of ways to sort of keep the paper game going while the real metals are accumulated. Another point of view is I'm sure you also watch the COMEX COT market, commitment traders. I believe that's a big sham. Because if you look at the number of futures trading in silver, like even on a Friday, I think around 50,000 contracts traded. That's like 250 million ounces. That's a quarter of the annual production. First of all, I mean, just it's crazy. But that's not alone by silver. There's oil, it's the same thing. It's gold, it's the same. All the metals are the same. That's not in itself interesting. What's interesting is if you look at the weekly commitment traders report, you're seeing an uptick or downtick of the commercial short position changed by an order of like 10% from negative 110 contract to negative 120. I mean, if you just count the ticker, you can clearly see, the shorts are whacking the market at 8:30 in the morning. And with our AI, that's the bots that are taking down the market in a very thinly traded market that probably flushed out 20, 30,000 contracts a day. Okay, so how could the change in the COT only account for like 20,000 contracts change? No, I've given a lot of thought on how that's possible. And I think, they can do the guys that long versus guys short, and they can designate another market that's long, that's taking the short position, and they count that as another commercial, right? So there's a lot of ways you can sort of put together a service of these reports. And there's no check and balances anyway. So that's kind of a short answer on why the guys want to. I think the key here is they have to suppress gold and silver, and then they're back in the truck at the back end. They don't care about the paper loss. And then imagine if silver is $150, which probably where it should be right now at $150 oil price. If you look at oil at $80, 40 when silver is 50 back in 1980, well, if oil prices is 4 times at 150, 120, then silver should be 4 times at 50 times 4 at 200, right? Gold at 800 times 4 times should be at 8 times 4 should be over 3,000, which I believe is what there should be. But with just a variety of factors, a lot of sort of they're just capping a lot of different ways. However, if there's a place to shine though, Mario, for gold and silver, I believe it's going to be very, very soon, before 2030, and likely a big bang in 2023. I think you're going to rack up a big chunk of gains. And for a reason, actually something we haven't really touched up on, which we can do right now, is to do with the geopolitics. I think for the first time, we're seeing geopolitical instabilities that only being triumphed by World War I and World War II. So I mean that is a very significant factor that comes into play that very, very few people talk about, Mario.
So yeah, let's talk about the geopolitical side of things. And so you think the origins of what's going on now is World War I and World War II, and I believe that as well, because in World War I, the U.S. only participated in the last year. And
yes,
before that, American business boomed because they're selling all the war materials to
Yes.
Europeans. And then World War One, of course, led to World War II because the Treaty of Versailles was really punishing to the Germans, so they wanted
Yes.
revenge. So yeah, so what do you see right now in terms of geopolitics that is affecting things?
Well, Mario, I'm glad to talking to somebody who studied history. The reason for World War One to take place and the American getting involved at the very last minute because the UK was in danger of losing the war. And UK owes a lot of money to the Hochschilds and Rothschilds and JP Morgan. So then unexpectedly a boat coming from the US channel loaded with Americans happened to sailing to France and was bombed by the Germans. And so, there you go, getting the Americans involved. And now we're looking into, well, let's back up for a second. Money and politics are well intertwined, as I mentioned to you. And the dollar and the hegemony, the status, supreme status of US is only for a matter of convenience. So a lot of the country, and the reason for the U.S. with this special designation was U.S. has got the biggest gun. It's the most technologically advanced. It is the military superpower, and that it was a convenient. It's arrangement of convenience. And Mario, and while all the craziness is going on in different parts of the world, in Europe, in Asia, in parts of Africa, in South America, they can count on the United States as play as a neutral role, and they know that they can repatriate their ill-gotten gains to the Miamis, to the New Yorks as a refuge, and so started with 1913. The sovereign of the dollar was lost, then followed by the Bretton Woods Accord II in the 1970s, when the sovereigns of all the G20s were subordinate to the dollar. So that is when the real empirical expansion of the United States really got started. And the last chapter was that 2010 to 2020, when the world was flooded with the dollar. Okay, and that is, I think, first of all, to prep themselves with the eventual sort of taking down the world economies, because you're setting the stage for rising of interest rate and further consolidate all the asset bases, right, and then deprive of the middle class of anything that's owned through inflation. And now talk about further into politics is some of the most ardent supporters of the dollar and by that token, by association of the United States and pleading their allegiance were only a matter of convenience. As I said, Mario, look at the Japanese. They were bombed by the United States. If you look at the Germans, right, they were, and if you look at the USSR, that was broken down and Gorbachev fled to Washington, D.C. And then if you look at China, Opium War was not even about 100 years ago, and China was humiliated, and that was UK that was on the backdrop of the United States. So and for the last, I would say probably 50 years, especially the last 20 years, all the countries are using the technology and the advancement of humanity and advancement of science to advance their cause militarily, wealth building, technology-wise, and now, Mario, witnessing, it's just not only nuclear reigning supreme. You can have biological weapons. You can have, people getting poisoned with the trace of these chemicals, and there's a lot of different ways that you can really do damage. And so, especially given this Ukraine situation, and you're talking about a war that's going on for 6 months, but you look at European countries are running out of inventories of military equipment, and United States, especially if a war to break out between the Taiwan Straits, And there's no better time to do that, given that Xi Jinping just consolidated his power. The world is going crazy with the different lockdowns. And if there's a time to do that, and then if the US doesn't step up, which I don't think they will, given the elections in the United States, and it will not be a very popular policy in the US either. And it may be late to the game anyway, given how slow everything's acted. Then all the savers in the world, especially Asia, is going to think twice about pleading further allegiance to the American politics, and by association, further to be pleading further allegiance to the dollar. So then you're talking about, when the Russian rubles were taken out of the SWIFT system, you see the ruble went from 50 to about 100, and now the ruble has come back to the level or below. The exchange rate is stronger now for the ruble than pre-war. Some people say it was because the rubles was they jacked up double the interest rate, and now they were seeking yield. But now the interest rate is almost the same level as before. So I think that's taken everybody by surprise. And that's what happens when you get out of the Ponzi system. You're going to have the initial disruption of your exchange rate system. But now I think as countries are evaluating over time, and one after another, of the advantages and disadvantages of continuing this SWIFT system, right? First of all, you cannot seeking refuge to the dollar system anymore. They're going to block out your SWIFT for Chinese communists or Russian associates, and they don't like they lost that neutral status. And secondly, I think just being so many rules arbitrarily set up by the United States, and who can come in, who cannot do this, shut this off, doing that, they're getting fed up with this, especially if the big gun doesn't show up to offer that protection as they will promise. Then militarily, economically, there's just no, and refuge wise, there's no incentive to continue in that strict system. So therefore, I see a fractured world, not in terms of just logistics and supply system and politics, but also in the financial system. You're going to see a decoupling of the dollar as being the world reserve currency. And then what you will see is a resurgence or the reposition of the gold and silver back onto the world as the currency is. We can talk about Saudi Arabia for a second also. I mean, there's no reason for Saudi Arabia to continue to put up with the rhetorics of the US, right? Especially with all this sort of arbitrary rules and temperament that's increasingly become very irritable. And looking at the biggest customer of Saudis, which is Asians, and look at some of the arms that can be provided, that will be Asians, and look at the geographical proximities, again, it will be Asians, and to some extent, East Asia and Eastern Europe. There is no, I think there's going to be a lot of reorientation and very, very deep thinking to reconfigure the status quo as has come on in the last 50 years. There's so many things going at stake that I just don't see. I think it is the perfect storm for the dollar that we're going to see. And last point, not as if we haven't covered enough topics. Even within the United States, there's a very divided view. I think that I don't think that the current U.S. politics are serving the U.S. populace well. You have a broken border, and you have policies are increasingly two-tiered. You have domestic infighting between men and women, between Republican Democrats, and you have a lot of politicians that are being fast scripts that doesn't make any sense. So what's fortunate is because of the Constitution in the United States, it's not all being eroded. Not like the UK or like Germany, where basically one party rule all. There's no check and balances, but I think there's some states I think the individual states still have a lot of governance. And to that, I think there will be quite a lot of apolitical enterprises. There's a lot of people that are very wealthy and they have earned your heart keeping, and they see what's going on in the world like you and I have, Mario. And I think that they are going to start exerting their political clout with their financial. I think the relatively still has the financial freedom and freedom of speech. I think over time, especially for the next year, you're going to see quite a bit of assertion and a bit of voice that's coming out of people that used to stay apolitical. I think a perfect example is Elon Musk, right? Elon Musk is like, I'm not going to put up with this. And I think there's a lot of wealthy A10 figure people that just say, you know what, like, leave me alone. I just want to raise my kids. I want to preserve my wealth. I want to be able to travel. I want to be able to do my business. Increasingly, they're just being handicapped. They're just being held hostage of all these capricious policies are on all fronts. And I think there's only one place to voice their oppositions or make their voices heard, and that will be the United States. So I think even in the US, there's going to be a lot of very interesting dynamics that would take place, and that's really going to be the place that you watch, because I really think that in terms of where the UK goes and Germany, I think this all the causes, Australia, all the causes are already lost, and China is another big one. You know, they have a lot of access to grind, just like Putin. They don't want to go through. I think there are some people that demanded another opium war concessions from China, and they're going to put up with this. And what that means is you're going to see a very, increasing isolation, separation of these two largest world economies. That's not going to spell well for the SWIFT system, where all the Chinese companies get delisted from the American Stock Exchange. The trade numbers going to come down. People are going to, these respective countries going to restrict technological and military-related trade balances, like computer chips, AI technology, critical minerals, import and export. And it's going to get even more and more ugly going on, because it's like in the end, Mario, used to be the United States a big gun. They're relatively neutral and benign, so people sort of put up with it. But now people are well-fed. They have been biting their tongue for the last 30 years, and now they are flexing their muscles, and they're just like, I have enough of this, and I'm going to show, I'm going to exert, and all these regional countries, they are consolidating their power, like Turkey, like Russia, like China. So they're exerting themselves internally, and now they're resurfacing, and they're repositioning themselves, and they are onto the international world stage. So you're gonna see a lot of different. I am apolitical. I don't take sides. I am from Taiwan. I was born. I was educated in the United States, England, which was a place I'm very fond of back in the 80s and 90s, and then I went to school in the United States, and then started a company in Canada. So I see I was very fond of all the different cultural diversity in different countries back in the days when people don't go about race or gender. Unfortunately, all the world is looking the same.
Yeah.
It's the same. It's the same narrative.
And the thing is, as well, I'm apolitical as well. And when some people listen to what I say or you say, they'll say, oh, you are anti-West. No, we're just telling you what's going on so that you can better protect yourself and your family. So yeah, John, maybe you could talk about your company now and how you're trying to profit from this current environment, and tell the viewers about your company, Silver Elephant Mining.
Right. Mario, I want to bring up one point before moving on to a bit of introduction to the company, which is sponsoring for my time to be on your show, is there's no so much about, I mean, every time I talk to somebody, I meet somebody on the street in different countries, of which I travel more than 35, including around the world 3 times already this year. People are very quick in labeling, right? They're almost like they are identically, there's a sort of ideological or identity possession, right? They're like, oh, you're from the West, you don't know, or you're from the East, you don't know. And I am, so I am a bit of a global citizen. It's not so much United States versus Russia, or it's not Ukraine versus United States, or China or Taiwan versus that, or England versus Russia, or anything else. It's the people that are controlling these countries and using this nationalism as an excuse or as a reasoning to further their personal power. Eventually, as Sigmund Freud said, people do 2 things. Men are motivated by sexual behaviors and feeling of importance. So they want to be able to have more power, more influence. Everything else is a pretense, whether from history or they use a lot of history, religion, race, gender to advance their personal agenda. So it's not about East or West or this country versus that country. Eventually, we do business, all these different places. Our company hired, over people of over 15 nationalities. We have men and women from all over the world, and we have people from Ukraine, from Russia. They work very well together. We have people from China and Taiwan. They work well, and it's about people being laissez-faire, given their personal space, given their rights to do what they want to do, so long as they don't interfere the lives and property rights of other people. I think that is real. That's really sort of been what's being meddled upon. Now talk about Silver Elephant. I started out as an investor, Mario, interestingly, in the Silicon Valley for 5 years, from 1995 to 2000, and I saw the craziness. And I was retired because the company I worked for was sold to Oracle. So the timing was very opportune. And I discovered gold and silver. I was a global citizen and lived and traveled so many countries. So that really got me onto gold and silver as a student of history and economics. And so I started investing, and for the first 10 years, I'm doing very well personally. Then 2010, I started the mining company as a hobby more than anything else. It's like, well, a lot of the junior companies, which I bought and sold shares for over 100 of them as an investor, right? And then I took over one. I thought it's a hobby. Look how it works. And less 10 years later, and we raised over actually $150 million through the Toronto Stock Exchange. And we bought, probably there's not another mining junior CEO as active as I was. And I treated, Mario, my company, as more a portfolio than, say, a traditional sort of one directional, put a project into production. So I was able to select assets that I want and do the due diligence, and not so much like a milking an asset until it's a dead end. So if a project has no prospect of ever being developed into a mine, then I would rather look for something else. The company was spun out or split into 4 ways because, it was to offer the investors a bit more discretion and control over what they want to invest in. So the vanadium asset, the nickel assets were spun out of Silver Elephant, which the asset kept in Silver Elephant was a Bolivian silver asset and a coal asset, which was acquired 12 years ago. These assets were well developed. They're not speculative in the sense of it's a discovery play, Mario. So all these assets I've scouted, I hand selected, I looked at it for 5 to 7 years. I was very patient till the time was available. We grabbed them at the bottom of the market, and the silver project was 2017 when silver was $14. And all of them had $50 million invested in the silver projects, over 100 million ounces of silver. The project is in Bolivia, which we like. And it's not so much in politics. I was in Bolivia in 2005 as an investor, and that's before Evo Morales came, and Evo came and gone, and the country is a mining country of 250 years of history, and it was the Bolivian silver that helped Spaniards conquer the West, and also Bolivian silver that provided that railroad to Antofagasta, which used to belong to Bolivia, but now through the civil war with Chile, that land was lost to Chile. And this long story, fascinating. I can talk to you about how war got started. All these borders are very arbitrary. You have few peasants are throwing some rocks, and all of a sudden the treaty is created and the lands were withdrawn. But the project has, I looked at Mario as an optionality play, especially in the first 5 years of the company. But now, I've really learned the hard and thin, difficult parts of this industry, and I've learned more than I want to know about all aspects of it as an outsider in permitting, in environmental, in exploration, in metallurgy, and feasibility study. So, I look at this, Mario, to answer your question, sort of a long-winded answer is, I believe Silver Elephant is an ideal optionality play. So, you see a lot of so what I mean by that is we are very conscious and cognitive we're very conscious and observant of our cash flow. So that is kind of akin to a call option, the decay aspect of it. We try to keep our burn rate as low as we can. We're also a very good market timer. I was able to raise all the money, acquire all these assets. And so we try to deploy our capital strategically. We try to buy assets on the low and try to exit on the high side, and not particularly married to selling the or developing the project ourselves. We're looking into maybe divesting to selling to other joint venture or 100% outright. And where we are right now is to de-risk the project. It's a bit of a cliche, but we want to make sure we continue our excellent relationship with the local community, which is a mining community, because this community has been in mining for the 200 years, so they understand mining. It's not like some parts of Argentina that have no knowledge of mining, no experience in mining. All of a sudden, you have people that drive Mercedes and started touting their project next door to you, of which you used to raise cattle for living, and you thought that mining is an easy business, and you demand, So I think they understood the ecosystem quite well. So we're very comfortable with the local community. The project had well endowed and well drilled out. We're very comfortable with the assets. We're in the process of updating the feasibility study so that we can provide the economics and showcase what the project could become and the sort of cash flow revenue that could bring to the project. And so that we establish some firm parameters on exactly what sort of optionality you're looking at. Given the current market cap that we're trading at, right now we're $15 million Canadian. It used to be 5 times that, if not more, only a year ago. I think for those people who believe that silver is gonna come back to $30, recover $30 next year, there's no reason for Silver Elephant not to be, revisit that 4 more times of glory that was only 18 months ago. With a better story to be told, with the assets more developed, more mature, nothing is lost. And I think this year, like I said, I think coming on your show is a starting point of reconnecting the story back with the investment community as something we weren't spending a lot of money in doing that, because we don't see a reason to, given the headwinds on the rising interest rate and the headwinds on the correction in the equity market. But I do think, as I mentioned at the start of the show, that both of them are going to fade, at least in the first half of 2023, and coupled with that precarious dollar problem with not so much higher risk can go, at least in the short term, and the hegemony with the geopolitics breaking down, is really going to provide that tailwind to the gold and silver. And I think right now are going to consolidate between $19 and $22 for silver in the next 2 to 3 months. And people are going to be in the mode of disbelief. And then all of a sudden that stealth rally is going to break out, and then you're going to see metal just break out to about $30. And that is going to be driven not so much on the COMEX volume or on the hedge funds bidding up these COMEX contracts that are hammered out on a Friday or being trick-or-treat out of their position, but it's going to be the physical buying, just like it was in 2021, when Eric Sprott and the Asian investors were cornering silver, reportedly bought something around 30 million ounces of silver in physical market in Asia before the COMEX opened and just attacked that market. However, I want to preface, Mario, that this time it's not as simple as 30 million ounces, because JP Morgan learned their lesson. Their hedge book almost blew up. So reportedly, JP Morgan has around 200 million ounces in their warehouse inventory, just to protect that short position and continued management in the paper market. But I am not sure that if the 200 million ounces is going to be enough, because 200 million ounces is $4 billion. That's a pin drop. I think somebody is going to be brave enough, stick their neck out, and with the good planning, it's not a matter of buying 4 million ounces of paper contract demand delivery, because you're not going to get delivered, and you're going to get a call from the Fed asking why you're doing that. Are you money launderer?
Yeah,
it has to be multi-dimensional strategy approach, and then just siphon that physical off until the inflection point come. And I think that's going to be 2023, because I think all the chess game is very there for everybody to see that the dollar is going to be in a very precarious position, and that it's not going to lose a lot of status in the dollar index, as we talked about, but just people opting out of the dollar system. I mean, when I say that, I begin a lot of thought, Mario. It's not like, oh my God, today the dollar is 3.25, and pound is 2.25, and euro is 3.5, and Japanese yen is 1.5, and playing that arbitrage. I'm talking entirely opting out of the system. So those people are going to buy silver. I've had enough of this potential confiscation, this digital currency rollout. I'm done with this chasing, playing with the yields at the whim of the central bankers dictate directives. And I don't care what the official inflation figure is. I don't care whether gold is catching up to 1.5% a year, a quarter, to catch up with inflation of 6%. They're just not, they're going to start pricing themselves out of fiats. Just like I mentioned to you about the politician, like the shadow figures, like elites, they're not pricing their wealth, right? With like, I look at them account bank balance, like I got like 3 million pounds versus $1 billion. They're gonna say, oh, I'm gonna sleep well because I have 50 ounces of silver, I have 200 ounces of gold, and then tomorrow I'm gonna have 250 ounces of gold. I think people are gonna switch to the mentality, and the gold is in their vault. They don't care about their wires not getting through. And funny enough, I want to share. My name is John Lee. One day I was trying to wire money to my Royal Bank of Canada in Canada from my Hong Kong bank account. They blocked me. They wanted to provide evidentiary support that I am not related to John Lee of the Hong Kong person that is ruling the Hong Kong administrative region. So it's not a joke. And I was thinking, who would be so stupid that if I really affiliated to Mr. Lee through relations, that I would have, be powerful enough to get another passport with a different name, right? But my account's flagged, and I am no longer able to transfer money out of my account into my account. I can take money out of my account, but I cannot put money into my bank account. And so that was just something for you. So, if you are a national doing a lot of business, as China and United States war worsens, and then Ukraine, and then all this craziness that's happening around the world, people are going to stop are going to stop balancing their wealth in away from this dollar system, SWIFT system, fiat system. And I think that is what will happen in this new situation. Especially these people are looking to refuge. They can't just, I'm going to get out of the Chinese communist system, I'm going to seek refuge in Miami. Well, you can't do that anymore. The Russians can't do that. And then think about if Japan were to switch their allegiance to Russia away from the United States, which bombed them in Hiroshima, then how is that going to play out? That's $1 trillion. There's another $1 trillion of U.S. Treasury, right? And especially, as I mentioned, if the United States doesn't step up to the plate to protect Taiwan, then the Japanese have to think twice. Saudi Arabia has $600 billion of foreign reserve. And there's a lot of, tits and tats going on right now. So, and there's just a whole lot of things going on. I mean, going back to my point, I think I much welcome your viewers, those people that has a bit of, can tolerate a bit of risk to stomach into the junior mining sector. Can pull up the chart of, say, First Majestic and laid side by side Silver Elephant. They're almost identical. We almost get crashed harder, but we rebound higher. Yeah. And so I would recommend, put all different eggs in different baskets in the mining space, particularly in silver. You have the Heclas and Coeur d'Alene, First Majestic, Pan American Silver. And I think in second tier, there are a number of companies like Silver Elephant. It's already risky enough. You don't need to make a discovery play right now, hoping for the next drill results is going to get your discovery, because there are plenty of companies that right now that already been through that phase, right? So you can piggyback off that, of the sweat, the money that are being sunk into it, of which are trading a value that's actually a fraction of the money that have been invested to come to where the companies are and the reserves of resources set in the ground. All right.
Great. And could you tell the viewers where they, if they're interested in looking into your company, the ticker symbol and where it's traded?
Yes. We're trading on the Toronto Stock Exchange. The symbol is ELEF. That's how you spell elephant, with an F. And we're trading over the counter on the OTCQX. The symbol is SILEF. And there is, the stock is flatlined, and Silver Elephant on the OTCQX was top 50, so it was one of the highest trading volume of stock on the both in Toronto and also in United States. And let me show the interesting story is that at the bear market, especially at the bottom, that liquidity is almost non-existent. It's always at the top of the market that there was the most liquidity. As I was, our headquarters is in Vancouver, so I have a bit of real estate investments in Vancouver. Year 2000, as I mentioned, I got into the mining business because my girlfriend was in Vancouver when we moved from Silicon Valley. And I looked at the condo, it's 1,000 square foot for $250,000 US, or 250,000 Canadian dollar at the prime of the market, at the bottom of the market. And then the real estate agent said, why would you ever want to buy a real estate in Vancouver when, that was year 2000, that was the .com, the hype of the .com. He said, you're much better off. Like, I have a counterpart in Las Vegas. You're much better buying in Las Vegas. Well, instead I bought the place in Vancouver at 250, and now it's 1.25 million. And so I would just say you got to have a very contrarian play and the low liquidity and the low price actually flatlining of silver stocks right now is a contrary indicator within the contrarian market that it's time to accumulate, because when the markets get heated, the same lack of liquidity actually play on your side, because the people want to buy the stock, there are not so much liquidity that's available for them to accumulate. So I think just another interesting aspect for your viewer to consider. And lastly, I'm quite active on Twitter, and all this thoughts I've shared with your audience, you can go on Twitter, just search Battery Metals, John Lee. You can find me and tell the market like it is, and you can find all my prior forecasts or predictions about 2021 on the rising interest rate and the crash of the equity market. And then I'm going out on the limb today. Silver is 19 and change, and go to 1650, and saying that both market is bottom. You're gonna get a bit of choppy action for the next 3 months, and you're gonna see the market just go, steadily ready to take off in the first part of 2023. Mario.
Oh, great, John. It was really nice speaking with you. And maybe we can speak again in the future, maybe in early 2023.
I appreciate it. Thank you, Mario. Stay in touch.
Yeah, thank you.